Hey everyone, it's Angelo. We're back again today with another interview. Today we have Jeremiah Eck from Guild Mortgage, and he's going to be talking to us a little bit about what the lending process looks like and what you need in order to qualify for a mortgage. Hey Jeremiah, how are you?
Good. How's it going, Angelo?
Good. Thanks for coming on.
Yeah, thank you for having me. I'm so excited to do this with you.
Yeah, me too. So why don't you go ahead and introduce yourself and kind of tell us a little bit about your background, etc.
Yeah, my name's Jeremiah Eck. I'm a loan officer with Guild Mortgage. I've been in the lending and mortgage industry for a little over, well, a couple of years. I absolutely love it. I think it's one of the best industries to be in, and I love real estate and totally believe in home ownership. I can't think of anything else I'd rather do than help people buy homes and refinance homes and sell homes. I think it's incredibly rewarding.
I love that. Yeah. So the first question is, a lot of people ask me, what is the credit score that one needs in order to qualify for a mortgage?
I get asked that at least 10,000 times a day. I think it's a very big question that people don't really know, obviously, if they're asking all the time. But the minimum right now, just the bare minimum you need is a 600 credit score.
Okay.
You'll get better terms at like a 620 or a 640, depending on the loan program and how much you're putting down and those kinds of things. But the bare minimum you need to qualify
Mhm.
is a 600.
Gotcha. So the other question I get asked all the time and again is, how much down payment does one person need?
Yeah, I mean, like the big question, the scariest question, like how
Yeah.
much money do I need to have to buy a house?
Mhm.
Technically, like if you're a veteran, you need no down payment. If we look at a USDA loan, which is something for rural areas only,
Right.
you don't need a down payment. FHA requires 3.5%. Conventional requires 3% if you're a first time buyer.
Mhm.
And we can go into that in a little bit. And then if you are not, then they need 5%.
Gotcha. Do we need a job history and how long does that have to be?
Yeah, so for every loan, USDA, FHA, VA, conventional, we have to verify a 2-year work history at some point in time.
Right.
So it doesn't, if let's say you were a stay-at-home mom, you had a career, then you became a mom, and then you stopped working, like we can just qualify you based on your previous work history
Oh,
as
okay.
long as you've been on your new job for
Mhm.
at least 6 months. It
Okay.
depends on your income. It depends if you're commission based, if you're W-2, if you're salary, if you're self-employed. It all kind of changes. But the rule of thumb is about 2 years. If you're part-time, for sure, 2 years,
Gotcha.
which depends, but about 2 years.
So this is, I guess, one of the most exciting questions, and it is, what are some of the first-time home buyer programs available to people that have never owned a home before and want to, take the path into home ownership?
Oh my God. So this is like the $1 million question. I get asked this at least, like I said, kind of like 10,000 times a day for credit. So, as I mentioned earlier, like there are like minimum credit score requirements. Like you have to be at a 600
Mhm.
for an FHA or VA loan, and you have to be at a 620 for USDA and conventional. There are two different housing authorities in Nevada that provide down payment assistance to first time home buyer, but we need to define what first time home buyer means. And all that means is that you've never or don't own property of any type in the last 3 years.
Okay.
So if you haven't owned a home or you don't own land or you haven't inherited anything like that, then you can technically qualify. And that's where the conventional 3% option becomes available.
Mhm.
First time homebuyer programs, though, are housed by the Nevada Rural Housing Authority and then the Nevada Housing Division for Home is Possible and Home at Last for both of those, kind of respectively. So they are available. You have to have a 640 credit score, so they're a little bit stricter on your credit requirements and they're stricter on your debt to income.
Gotcha. So what does that have to be, the DTI?
The debt to income has to be 45%.
Okay.
So out of the gross income, I can use 45% of that for their mortgage payment and all of their debts.
Gotcha. Okay. And I assume you have a lot of experience with all of these, right?
I do. I do. I mean, they're really good programs if you need them to qualify. If you have your own down payment or a source for a down payment, then I'd recommend using that most of the time if you can or willing, that kind of thing. But if you really need the program, they're great. They'll give you anywhere from 3 to 4 to 5% of the loan amount towards your down payment and closing costs. And so for a lot of people, that's kind of a make or break, especially with my younger clients.
Yeah. So then a lot of people want to know, once we go into escrow, how much time should we be expecting to wait until we can close on our home?
Yeah, big question. Like, especially in our market right now, like, how do you make your offer competitive? It depends on a multitude of factors. Like, what kind of home are you buying? Where are you buying? Is it a condo? Is it a manufactured home? Is it a new build? But I would say in general right now, it takes 30 to 40 days for the loan to close from contract to closing. So about a month and a half.
Sorry, from going under contract to close of escrow. What is your checklist, basically?
Oh, good question. So basically, once the client is in contract, I usually meet with them within a day or two to sign what we call their loan disclosures. And that's basically all of the items that, go over their rate, their payment, their cash to close, just all the details they need to know. Once they've signed all of that, I submit it to our processing and underwriting team, which is great at Guild Mortgage because we're local. So we're a national company, but a lot of my processing and ops team is local. So my underwriting team is mostly local. I have processing in Arizona, so it's really close. So it makes it really streamlined. And then once they're in, that process, we get conditional loan approval. And then we work with the borrower to finalize whatever other documents they may need for final loan approval. And then once they submit, all of that stuff to us, we get the final loan approval. We submit that to title. Title draws docs, and then they go and sign their loan documents, with title. And then theoretically, depending on when that happens during the day and what day and those kinds of things and the type of loan, we can get it funded and everything the very next day or even the same day.
Yeah, awesome. Thank you so much.
It's an amazing process.
Very exciting and definitely could be very stressful too, but that's why we come in, right? To make it.
So you need a good loan officer.
Yeah, exactly.
A good realtor.
Yeah. So the last question, I asked it to everyone that comes doing these interviews. Is there anything exciting going on or any big plans for 2021? Basically just where you, what should we expect from Jeremiah for the next year?
Good question. So, I've been working on a team for a long time, and I'm going to be starting my own team here in the next couple of weeks.
Awesome.
So, yeah, very exciting. I'm really excited for it starting in March. But also more than that, I'm really excited to see what the market is going to do. I love that we have a lot of buyers moving from out of state that are relocating and getting to know their stories and their history and why they think our area is a lot better to live in terms of quality of life and pricing and those kinds of things. So I'm really excited to begin my team, but also continue to help all the families I can this year and just build as many relationships as I possibly can in our community. And I do suspect that interest rates, I had a meeting with our vice president of capital markets last week. And we talked about how we're still going to see refinances. We're still going to see young millennials and Gen Zers get into homes. So I'm really excited for that.
Yeah, I love that. Thanks so much for all this information. It's really refreshing to get that perspective, and it's a great prospect for this year.
Yeah, aren't you excited to see our market just blow up?
Yeah, definitely. It can be challenging at times, but it's exciting for sure.
Yeah. No, I'm really excited to see how Reno evolves and how Fernley evolves.
Right.
Just all of the rural areas.
Yeah, definitely. Well, thank you so much for coming on. I definitely appreciate your time. I think it was super informative, super helpful. And for you guys who are watching, stay tuned for the next one. All right.
Yeah, thank you for having me. I'm so excited to be here, and I can't wait to just fresh 2021.
Yeah, me too. All right. Thank you.
Okay.
Bye.
Bye.